Hello traders, the title of the video is how to craft best area weight strategies for soybean futures trading. Alright. Looking at the chart of soybean futures, there are similarities between the soybean futures and the wheat chart. Okay, wheat, WHEAT, wheat commodity. So there are similarity between the wheat and the soy bean. Those are grain, commodity grain. All right. When I was analyzing the wheat chart on a monthly chart, we saw similar pattern when the price form a kind of an impulse wave that we call the first wave, alright, and then we were calling the second wave a consolidation, ending somewhere here. Check that video about the wheat trading. I'll try to give you the title of that video, how to use area wave theory like a top wheat commodity wave trader. Check it out. So we call something like this. So there was similarity. So second wave somewhere there, and then we were saying this is the third wave, similarly to wheat. But as I was discussing with traders, I was saying to traders that is this the fourth wave or is it the second wave instead? But if we call it the fourth wave, we will quickly, as I told traders, that there was an error in that video because the fourth wave for wheat commodity chart was overlapping the first wave. So we saw something the first wave, let me say consolidation, second wave, and third wave, fourth wave. As you can see, if you are calling the fourth wave, that's a very deep fourth wave coming to the zone of 78.6% Fibonacci retracement level of the third wave, and also overlapping the supposed to be this the first wave. So if you call this one fourth wave, and if we have a sufficient data, so I have data from 1970, that's enough. All right. So if you call this fourth wave, that will be an Elliott wave violation because the fourth wave should not overlap with the first wave. All right. Similar structure like wheat commodity. All right. Did you spot that Elliott wave violation? So going into the mind of other traders, unless this is a kind of a distortion or an exaggeration, going to the mind of other traders, another trader may say, George, the trending first has started here, and this is the first wave, the first banner wave, there's something like a second wave, and this is the third wave. Pay attention carefully, okay? And this is the fourth wave that pulled back here, and followed by the fifth wave. Now, can you see, George? There are no more Elliott wave violations. So let me say fifth wave, a little bit above the third wave. First wave, second wave, third wave, fourth wave, fifth wave. So they will say, all right, Joe, this is not the first wave. Okay, going to the mind of other traders. So anytime we see 1, 2, 3, 4, 5, without any area wave violation, we can say that, we have found, one trending fail, or one impulse wave, or one multi-wave. That's it. Or we may say those 1, 2, 3, 4, 5 in blue form a first wave of a higher degree. Do you accept that? If you accept that, therefore you may be saying that, all right, you see this move back up, 1, 2, 3. This is a flat correction ending right here. Agree or disagree? You can disagree. Don't worry, you can disagree. So you see, from the fifth wave, George, out to this point here, between the two green vertical line, it's a flat correction. So price went down. You can see, it went down, went up, 1, 2, 3, then came down. Down. This is the C wave of the flat correction. So after that supposed to be trading file that is subdivided in 5-minute wave, we have a flat correction, and it is an expanded flat correction because the price was trying, you see here, was trying to touch the 138.2% Fibonacci extension level of that trading phase, but it couldn't reach it. Sometime, instead of reaching the 138.2% level before forming a C wave, sometime the price will find a resistance at the midpoint between the high of the fifth wave, that's the high of the fifth wave, and the 138.2% level. So you want to draw a line at the high of the fifth wave, or at the high of the multi-wave, or the high of that trading file, and also another line at the 138.2% level, and you want to monitor the reaction of the price at the median line between the two lines. So you can see that the B wave of the flat correction was heading toward 138.2% level, but stopped before the median line between the high of the fifth wave and that 138.2% Fibonacci extension level. Do you agree or disagree? Have you found something else? Let us know in the comment section. Or it is the real first wave, and it is fourth wave, somewhere here. So another traders, you can play that game a little bit more. Another trader may say, yes, George, this is the first wave, like the wheat, and then consolidation for many years, George, and then probably this is the second wave. It's a consolidation like the wheat, but George, the small mistake that you experience in your trader has made is that in fact this is the end of the third wave, followed by the fourth wave right there. But then I'll say it's overlapping again, area wave violation. All right, it's not working. All right, it's not working. So we stick to this one then, okay? You see, that's why you need to go into the mind of other area wave traders, so you may compare your wave count to theirs. If there is an area wave violation, you want to get rid of that wave count straight away, because we can't tolerate area wave count with a violation, as you can see it for the soybean and the wheat. There are similarity, exactly the same structure. We can sometimes you will notice that two financial instruments that have a similar price structure, sometimes one can be ahead of the other. If that is the case, we can use that discrepancy to forecast the price action of the one that is latent, the one that is behind. Are you getting it? So if, for instance, soybean price structure is ahead of wheat, we can use the price structure of soybean to forecast the price structure of wheat, because wheat may be behind soybean, or soybean may be behind wheat. Doesn't matter, because they have similar price structure. So you want to monitor carefully what is happening with soybean and wheat, and use the discrepancies or the latency, talking about predictive fractal pattern trading, at Day Pro Traders YouTube channel, at dayprotraders.com, in conjunction with your area wave, to improve your area wave forecast. So predictive fractal pattern with area wave forecast will also improve your area wave forecast. So you may say to me, John, what is a predictive fractal pattern? George, you are using a difficult word now. Go to www.dayprotraders.com dayprotrader.com. Click on predictive fractal pattern of Mr. Benoit Mandelbrot. All right. So that's what I can see now. Do you agree or disagree? Now, you can see that the commodity are volatile. That's the first thing. If you are trading commodity, I understand that they are the most volatile financial instrument. So if it's not working for you, you may switch to stocks or indices or currencies. Commodity are very volatile. You see all over the place. If you can manage it, very good. But one thing that I recommend to all commodity traders is that master what? Market geometry. See, George, I don't know about market geometry. Go to www.dayprotrader.com and subscribe to Dayprotrader YouTube channel. Check out the playlist about market geometry. I've done my homework. You can see that the price was consolidating, like wheat, soybean is consolidating between the level of 9400. That's the top here. So they are selling here. Everybody agree? They sold in that zone. So they are selling at 940 zone. All right. 94000. And there is a support at 4714. 471 or 4714. And the median line, which is the mid target, if they are selling here, the midpoint target is the green one here, before the ultimate target is this one here. If they buy here, the midpoint target is the green one here, and the ultimate target is there. It's a consolidation play. So they have been doing that since 1973. That's why traders were using the commodity channel index indicator. Was originally designed for trading commodity. And the best setting for the commodity channel index is CCI period 30. Did you get it right? You are amazing boy. So you are excellent subscriber to Dayprotrader YouTube channel. So that's what they were using for many years. So everybody come in, they sell here, and everybody win, they took profit here. Everybody sell here, and the board bought it here, they all took profit here. So everybody was doing it. Over the year, the market has changed. It's not easy to trade the consolidation as it was before. Finally, it breaks above. That's where the market geometry comes. Prior it breaks above the range of a prior consolidation. One that is using the market geometry will measure the width of the prior channel, the top to the low. That's my measuring stick. You project in the direction of the price, and you draw another line that is parallel to the first channel. That will allow you to set another target, bringing us to that red line there. What is the exact level? It's not very clear. In a zone of 1395. 1395. If you project the width of the orange channel, bring you to the top of a new channel. Again, like we had before here, the midpoint target. There's again a midpoint target here at 1164. Now that the price finally breaks above it, we project it one more time. Are you getting it now? And again, we will draw another line that is parallel to the original consolidation, bringing us in this zone here. Okay. That's where they were pushing it. You see, they were pushing it to that target level. So if you are trading commodity, wouldn't it be nice to master market geometry? Subscribe to Daypro channel. Look for that playlist, Market Geometry Training Videos by Daypro Traders YouTube channel. And also visit www.dayprotrader.com. Will you promise me that you'll do that? Or have you already done it? Good. See, George, I've been there many years. There's nothing new there anymore, George. Post more. I will be posting more soon. Okay, so they were headed there. So you see how the market geometry can help you as a commodity trader. So you are looking for trading setup in the vicinity of those target level, ultimate target, midpoint target, and so on. Don't forget what we said before about the 138.2% level. Yeah. All right. So we see, so right now, map out the chart, draw the channel, project them, draw all the lines that I have on my chart, every key level, have it with you. And then the last thing that you want to do is to use the Andrew Speedfork tool. You may say to me, John, my name is Andrew, but I never done anything about the Pitchfork tool. And I'll say, oh, I'm not talking about you, Andrew. You are talking about another Andrew. Okay, so okay, where are we? Trending first and a flat correction. I think we saw exactly the same thing for wheat. So trending first. Okay, here it is. 1, 2, 3, 4, 5. Now we have a flat correction. A, B, now C. There's a flat correction there. So at this point in time, with the information that I got, I'll put here for now, choosing my word carefully, for now, second word there. We will see what will happen later on. We may have to adjust accordingly if the price is doing something that we were not expecting, because the area we count is one step at a time. So how do we get paid? We get paid by mapping on the chart. The first thing is to draw your Pitchfork tool. The first point for that Pitchfork tool, February 2002. The second point in July 2008. And the third point in February 2016. Have that Pitchfork tool on your chart. Draw other trend lines, okay, and key level. Map out your chart. Be ready to look for trading setup in the vicinity of one of those key levels. You remember the drill? Preliminary area weight count, all right, going to the mind of other traders, area weight validation, and mapping out the chart. We are mapping on the chart because we want to look for trading setup in the vicinity of one of those key levels. And if we see a trading setup on or near one of those key levels, we will implement a different time frame trading method. You too search the phrase, okay, different time frame trading method by a 2-4 stock trader if you have not yet mastered, okay, the top-down trading method. Another Pitchfork tool that I can also place on my chart, talking about still mapping on my chart without leaving any stone unturned, I can still place one more Pitchfork tool like this at the beginning of what's supposed to be our original first wave, okay, without any area wave origin. And now you can see that it's not very useful to us at this point in time because it's just pointing to the sky. Are we going to send a rocket into the space? And you may say to me, no, George, so remove it, which I did now, okay? So all in all, draw the orange channel, project it by using a wave and so on, draw the trend line, place the Pitchfork tool on your chart, and now look for trading setup on or near one of those key levels. Where we are now, all I can say to trader is this: priority to bearish signal below the 940, that's the top of that orange channel, and priority to bullish signal above it. So because they did sell it many times around that level of 940, finally they push it down again. Are they going to play the consolidation game again? But do me a favor, If you receive a clear-cut signal here to sell and it start going down, use the previous median line as your ultimate target. Don't use this one. Use this one as your ultimate target and divide the line between the orange and the green into two by placing a median line there. Are you with me? Okay. The orange and the green divided into two like this. Prior to bullish signal above 940, prior to bearish signal below it. Will it continue to go down or is it going to break above that level? Alright? You may decide to draw other trend line like this one. Is it useful? See? There, okay. All in all, map out your chart and look for high probability setup on here, one of those key levels. So for talking about how to craft the best Elliott wave strategy for soybean future trading, all right, mainly it's a consolidation play. It's a bit messy chart, but we managed to see 5 minor waves that form the first wave. Now the question is at the end of our second wave, are we going to have X wave or WXY wave or another corrective wave? It's a bit messy here. If you are thinking of the third wave, remember that there won't be any third wave if the market environment and fundamentals are not supporting the third wave. So it may end up being a consolidation, maybe even between this level of 1163 and this 940, or between this 940 and 702. All in all, draw your line, look for trading setup on here, one of those key levels, prior to bullish signal above 940 and prior to bearish signal below that level. Combine your Elliott wave forecast with the top-down trading method. So you have finished your Elliott wave forecast, you're expecting a third Elliott wave. Now map out your chart and look for trading setup on here, one of those key levels. And when there is a trading setup, implement a different time frame trading method to trade it. If the signal fell, come out of the trade, wait again for another signal. Trade on the edge around key level. You see, I have many key levels on the chart. Project the channel, leave all those lines on your chart. That will be useful to you. If the price is printing something completely different to what we are expecting, we come back again, we look at the chart, we leave our line there, and we adjust accordingly and take it from there one more time. All right, so this will conclude our discussion again about how to craft best Elliott wave strategies for soybean future trading. If this video has been truly useful to you, please let us know by giving us your beautiful thumbs up. If you dislike it, please mark it down. If you think this is an essential tutorial, feel free to share with your friend on Google+, Twitter, Facebook, and Tumblr. If you have not yet subscribed to our channel is 24 Elliott Waves. Subscribe today and be sure to click on the notification bell so anytime we upload a new video, you will be the first person to be notified. Sometimes I post video first on Facebook. My Facebook page is stochastic-MACD. So this will conclude our discussion today about how to craft best Elliott wave strategies for soybean future trading. If you want to learn more about Elliott wave strategies, go to www.24elliottwaves.com. Until the next time, enjoy yourself and be very happy. We are a TSTW, 24 traders. Thank you for watching, and I will speak to you soon.